Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, September 13th, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. Yet the US dollar index have a counter trend bounce of 0.6% last week to yet another lower high as it continues to reiterate its bearish 90-day trend duration since June now of last year. On the other side of the US dollar, you have the euro correcting in hand, minus 0.6% to a yet another higher low as it continues to signal bullish on a 90-day trend duration. If you take a look at the Japanese yen, the price action continues to remain muted as it was down minus 0.2% versus the US dollar and continues to teeter between trend. If you take a look at the moving along now to the British pound versus the US dollar, that corrected minus 0.2% last week as it also continues to signal bullish on a 90-day trend duration as well. On the back of the down dollar, you did have commodities, which were up slightly. If you take a look at the CRB index, the basket and blend 19 commodities, that was up 0.1%, moving up towards new cycle highs, which may get there today. If you take a look at the energy complex, specifically natural gas, which continues to inflate higher, which we'll touch on here shortly. If you break that down further, if you break the tape down here, you take a look at WTI oil, that inflated 0.6% last week to now 2.4% in the last month as it continues to reiterate bullish trend. If you take a look at copper, that inflated 2.7% last week, breaking out and reiterating its bullish trend as well. On the ag space, if you take a look at corn, that was not look like the other, did break down another 1.2%, now down by 6.5% the last month, which now brings us to natural gas. That one inflated another 4.8%, now taking its 3-month return now to 55.4%. And I would be remiss if you didn't touch on aluminum now, which price inflated to over 3,000. Inflated another 7.4% last week, now taking its 3-month return down to 17.8%. And just following that up on an economic print and PPI, we did have an all-time high for PPI, accelerating now to 8.3% year over year as far as inflation is concerned. If you take a look at the bond market, if you take a look at the 2-year, that's now gone up 7 basis points in the last 3 months, and you have the 10-year gone down 9 basis points, with the yield curve in the 10s, 2s now flattening out 16 basis points in the last 3 months. And so just touching on global equities here. You take a look at Singapore diverging from Shanghai, down minus 0.8% to minus 2.9% in the last month. South Korea down minus 2.6% to now down minus 4.9% in the last 3 months. As you have South Korean 10 years up 5 basis points, 2.06, as you have the Bank of Korea tightening now into a slowdown. On the other side, you do have Russian stocks. They did accelerate 0.4% the overnight, plus 3.9% last month, as you have oil continuing to inflate higher. Dutch stocks appear to be leading here, up 0.5% to now plus 2.3% last month. And Portuguese stocks last month, as you have oil continuing to inflate higher. Dutch stocks appear to be leading here, up 0.5% to now plus 2.3% last month. And Portuguese stocks coming in late to the party, have up 1.5% to now plus 3% in the last month. And lastly, touching on domestic equities here, the SPYs have set a strong inverse correlation risk now with the dollar of minus 0.72. on a 15-day duration, which is not surprising considering you saw yesterday, last week, yet another episodic bout of volatility in Thursday and Friday. That's with the VIX coming in and coming up to the top of the range and setting yet another lower high, with implied volatility now ballooning to plus 81% versus the 30-day realized. It's also coming on the back of falling volume. If you take a look at the volume, 910 versus the prior day, that was down minus 3% and minus 7% on the 1 month average. So effectively, this is reiterating a buy the dip opportunity in the SPYs, as well as in the Qs and tech. That's ahead of coming up on a bevy of economic prints that to be reported, most importantly tomorrow, the CPI, industrial production, retail sales, jobless claims, and consumer sentiment on Friday. So with that, that's all we have for you today. If you have any questions or like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep